Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 11th, 2009. Well, we're seeing exactly what we talked about in last night's Premium Subscriber Research Center video, which is consolidation, folks. And that's what we talked about yesterday in the video that last evening. And we kind of just touched on a couple odds and ends. I mean, there's some key levels that the chart hit today in this morning's session that also signaled a nice little pullback coming. And you can see that's happened to a T. Now, I'm going to go over all those key levels today on the intraday charts and leave the hardcore analysis for this evening. But nonetheless, there's some stuff in this intraday chart that from a technical trendline analysis standpoint is absolutely phenomenal. All right, number one, we want to look at what the market's doing today. First of all, the Dow down about 32 points, NASDAQ just up about 2 points, and the S&P down about 2.5. So Dow and S&P lower on the day, NASDAQ showing a little extra strength, positive on the day. Now, what we're seeing here is this. Initially this morning, we got a gap higher. In that same candle, we almost filled the gap. See this little bit of a tail formation? And you came all the way down to this key trend line. Now, in a second, I'm going to scan back on the charts and show you all exactly how we came to these trend line analysis points. But look at how perfect they are again, guys. And this is really what you need to know. And one thing this market's telling me is we're on a very, very key trend line point in this market. There's good support here in the market. Not only is it the 50 moving average, but you have this lower trend line which coordinates from all the way back multiple days ago to the low yesterday in the afternoon to actually this point right here, which is gap fill as well. All right, gap fill, perfect gap fill right here as well. So you have a moving average and two key trend lines pointing to this point. Now, the scary thing is in this point is that if this market were to break lower, below this, you all of a sudden do not have any major support for a little ways, all right? There would be a nice little, dipping point if we do happen to break below here, possibly down to this point on the charts, all right? And I'll draw that in for you all. So that's something you'd watch. If we break down below here and confirm that breakdown, and remember, confirmation is something that has to be had. You have to have confirmation. It is absolutely essential. But if that does confirm in the move down here and you see that confirmation, and again, this is stuff we all teach in the Research Center videos, then you would see a move all the way down to this possible point. All right? Now, I want to talk a little bit more about these trend lines. How did we know this market was going to reach a resistance point right at the tip top of this market? All right? How did we know that? And by the way, folks, the good area there where I unloaded some FAS, and those in the Research Center, I don't mind talking about it now because it's already a past trade, but all those in the Research Center in the chat room with us know I had been accumulating the FAS for the last week or so in the low 3s and high 2s. All right? Accumulating little positions every day. It went lower and paying off beautifully with a move into about the 425 range today. Absolutely huge move. Unloading that position. So again, why did we think that this market might meet resistance? Well, if you look back, and I'm going to show you this on their 60-minute, there's a big gap fill, and this is gap fill. This trend line represents gap fill. I'm going to show you that on the 60-minute. We might as well flip there right now so you guys can see it. And look at this. So here's your gap fill, and again, you can just draw your line straight over. All right, this is your gap window resistance, actually. Here's your gap fill, and draw that right across. And look at that. The tip of that candle going exactly to this gap fill, and that's when you have to take profits, all right? It's just the smart thing to do because look at what the market did afterwards. 3-bar surge to the downside on your 60-minute chart, and in fact coming down to this support line on your 60, which is right where it is, gap fill. All right, so that's gap fill support on the 60, but my point here was you have to know all your time frames. You have to know your levels. You have to know your price pattern and timing in these charts so you can actually be a profitable trader, especially in this market, because let's be honest, this is the toughest market to trade or invest in since the Great Depression. No doubt in my mind, and if you're going to be a profitable trader, you got to know your stuff. There's no way around it. All right. Now, going back to the intraday 10-minute, I want to show you a couple other things. First of all, let's scan back and show you exactly what we're getting for these other lines. How did we know this was a possible resistance line and we gapped right under it, pulled back, and then closed right under it again? The next candle you rallied up higher. How do we know that point? Let's scan back. Follow it, follow it. There it is. That line comes from the low on the 5th to this high pivot on the 6th and right up. In addition, you have a new point that's drawn in as well, which you can take from the high of the pivot, and then you connect it all the way through to those points, all right? And again, these are key points in the chart. This point right here, see how you got above it? You rallied to that next resistance point, at which point you came down, came to support, rallied up back to support, then finally broke through support. And remember, when support is broken, it becomes resistance on the upside. So notice how the market rallies back up here, and then it hits that point, can't get through it, that's resistance. What happens? The market falls. It goes right to that secondary resistance point, which coordinates with this high, and this point. You can see how those points were yesterday on the chart as well, and even the closing high in the candle right here. Well, that point now becomes key on the chart the rest of the day. Notice how you come down here, you pierce it, but you never close below it. You consolidate on it right on top of the 20 moving average as well, which is also good support. And then ultimately you consolidate in a bearish flag pattern, in spirit of bear flag pattern. And you have to know your patterns too, guys. You have to know what an in spirit of bear flag is. Bear flag, and this all stuff is stuff we teach in the webinar, which is coming up March 21st, 1 p.m. to 6 p.m. It's a Saturday. So you guys can sign up on the website for that. Definitely encourage it, guys. If you're going to survive in this market, you got to know it, because we're not out of the woods by any stretch. All right, obviously our premium subscribers know what we're projecting and our current status, but for the most part, you have to know your price pattern and timing. So bear flag, what does that mean? Breakdown. Also, what does this mean? And what did I just talk about when we started this video? Major support right here. Look at the reaction to this candle. You're starting to get a bid off of it. And again, that's just knowing your supports. And it's not just knowing the 50 moving averages there. It's knowing that the major levels of trend lines are also coinciding at that point. All right, and this is all stuff I can't stress enough. So important to know as a trader. Because as a good trader, you're right here buying. Buy. Sell for a scalp. Or maybe wait for another little push higher and then sell for the scalp. All this money is out there to be made. It's just no one knows the trend line analysis. It's such a rare art out there to be known and to be really taken for seriousness. All right. Now again, let's talk a little bit more about this intraday chart. Then we're going to go over to the 60-minute chart and discuss that a little bit. But what you're seeing here, folks, is a continued move up. And then what you're going to look for is what type of flag patterns you make. Do you make another bear flag? Do we rally into this 20 as it slopes down and then come back down, retest this, and maybe break? If that breaks, do we go here? So right away, you're looking at your 20 moving average on the upside as resistance. And remember, right now it's here, but the 20 will continue to slope down. So it may be here when the chart finally moves up. Who knows? We'll have to just watch that. That's something that each one will have to keep on their own pattern. On the upside, if you break higher past that 20, this will be your next resistance point. Remember, support, when it gets broken, on the way back up becomes resistance. And the same thing goes for all these points above. And look at the market continuing to get a bid here, guys. Again, I'm doing this live as we speak. There was, you can see the test my theories, test our chart analysis, test inthemoneystocks.com. We just talked about a major support at the beginning of this video. And what would happen? Bounce. And look at the bounce. So right here, if you're a scalp trader, this is where you're taking profits. And again, this is all the type of profit stuff we do. Talk about... we obviously do support resistance levels in the chat room. We really guide everyone. We're big play-by-play guys in the technical sense that we talk about major levels, and people trade at their own speed, which is the beauty of it. They watch our charts in the chat room. They trade our charts. They can ask us questions about specific patterns. We go pure technicals on the charts so people get a good view. And obviously in the chat, if I was in there right now, I would have said, obviously, just like I said to you guys, this was a buy right here off this double, triple support line, and look at the bounce you're getting. Now, you're looking at the 20 moving average on the upside as your next resistance. It may not get there in this candle, but you could actually get there in the next couple candles. It would not surprise me. NASDAQ is now up 8 points, and the markets have rallied back pretty significantly just from since we started this video off that major support line. Okay, let's talk a little bit more about the 60-minute. Just another mention. I just mentioned the NASDAQ was up 8 points. Taking a look at the Dow, just down a point now after being down 30 when we started this video, and the S&P up a point. So a good recovery. Now look at the trend line. See this little bottoming tail formation on the 60-minute? We talked about the support lines. These are your support and resistances. Here's S1. This is S1. We just bounced off S1 on this chart on the 60-minute. R1 would be right here, which is gap window resistance. R2, gap fill. Those are your points you're watching. On the downside, looks like there's a minor resistance point here, and then ultimately these moving averages down here will be your S2, S3 on the way down. All right, that's your 60-minute analysis, folks. And again, very, very nice little bounce here, and we'll see how long it lasts. Last but not least, guys, I just want to reiterate, you got to learn this stuff. It's not necessarily an easy cakewalk like just putting things into the computer, but if you can learn this, you will become profitable in time. It's all about time, study, putting hard work into it, just like any career, and you can be self-dependent, independent from any other body, and just trade for yourself and be profitable. Take care, guys. Hope to see you as part of the Research Center and the learning and the webinar and the daily chat, as always.